Yet, for some reason, we do have a debate about the 21 million hard cap. We do have a debate about the so-called Bitcoin security budget in some circles of the Bitcoin community. What is happening there? Are you worried about that? Yeah.
You know, I've met executives that run companies that have 100 million customers. I've met executives that run companies that have hundreds of billions of dollars of capital. I've met executives that manage trillions and trillions of dollars of capital. When I talk to them about Bitcoin, they say, oh, we like Bitcoin. We love the fact there's a 21 million cap. We like the, we like the protocol. This is great. Not a single one of them suggests changing it. You know who suggests changing it? It's people that have no money, no power, no influence, who are looking to make a name for themselves, right? So they're trolls. It's on Twitter, if you actually post, Satoshi did a good job, Bitcoin is great, let's support Bitcoin, well, you're one of a million and people might agree with you, but you don't stand out. But if you go on Twitter and say, I found a defect in Bitcoin, I think in 18 years, this bad thing will happen to Bitcoin. Well, then you get a lot of engagement. A lot of people disagree with you, but you're irritating and you're enraging, right? And they say enragement is engagement. So I think that, that people on Twitter are very sensitive. Nobody in the real world is worried about this, right? Nobody off Twitter is worried about this. On Twitter, you see people all the time that are provocateurs. And so they will just pick something that works fine and they'll attack it, right? And they'll question it. But, who wants to change the code and fix Bitcoin? Well, Greenpeace, why do they want to do it? Because they got paid $5 million by enemies of Bitcoin to do it, right? Right. So the people that are questioning it are people that want to raise money. If I want to raise $10 million of capital, to buy Bitcoin, it's very difficult. Okay, why do you want my money? I want to take your 10 million, I want to buy Bitcoin. Okay, well, I can just buy the Bitcoin myself. Why do I need you? Right? It's very difficult. You have to show that you're providing a service. But if I raise the $10 million to build the next Bitcoin, or to fix Bitcoin, or to do something, and if I can say that there's a defect, then maybe I raise the money. So I really think that the criticism comes from people that are looking to either raise money or they're looking to acquire influence, or it's like I want to get followers, so I go attack somebody or I quibble with them. I fight with a famous person who's got 100x more followers than me, hoping they'll respond to me, so that maybe I get some of their followers. But it's really trollish behavior, and it's more driven by, ironically, by those who have no influence and no money, right? The people that have the billions of dollars of Bitcoin aren't at all worried, and the people that can buy billions of dollars of Bitcoin tomorrow aren't at all thinking about this. What they're thinking about is, how do I rewire my accounting system, and how do I get authorization from the SEC to buy the billions of Bitcoin? They're concerned about more pedestrian things, like how do I integrate it with my system, how do I explain it to my investors, and how do I do it in a compliant fashion?
You've been buying hundreds of thousands of Bitcoin for MicroStrategy. You're an absolute trailblazer when it comes to using Bitcoin as an asset in your company, as a treasury asset. So where do we stand there? What are the next steps? When are we going to see other big companies adopting Bitcoin, maybe even in Europe? And also, if Bitcoin is now embraced by Wall Street, shouldn't the next question be, when are central banks going to enter the frame, and how are they going to do it?
I think that there are really three milestones we need for massive adoption of Bitcoin by governments, by thousands of companies, by all of the investors in the world. The first and the most important one, the one that's going to dominate this cycle, is going to be the spot ETF. because futures ETFs are just literally defective, right? If I said I'm going to charge you a 10% fee per year to invest your money, like your money's gone in 7 years, right? I'm just taking it all, right? So that makes no sense. So the spot ETF is going to be critical. It's going to solve the problem of how do I custody the Bitcoin? Most of these companies and investors, if they want to establish their own custody program, it's very scary, right? Have you noticed how many custodians have failed? And the issue is, how do I find an institutional grade custodian? And okay, well, you could say like you should self-custody. Well, how does, who at Microsoft is supposed to self-custody? Like, do you want to you're going to give $100 billion of Bitcoin to the CFO and have the CFO walk around with the private keys? Like, who wants that job, right? Like, how are you going to do multi-sig? Well, which 3 people at Microsoft, right? So it becomes a question, and it takes them a year or 2 years to answer the question. And is it possible? Sure it is. It just takes 2 or 3 years. And so if we want mass adoption, we have to solve the problem of custody, and then we have to solve the problem of compliance, right? If I'm an investor and I have $10 billion of capital and I want to buy $100 million worth of Apple stock, I can do it in 30 seconds via BlackRock or via one of my major money managers. And I don't even have to come up with $100 million. I could have a nickel, make a phone call and say, buy $100 million of Apple stock, put the phone down, and have all the money at the end of the day without putting up in cash. And it would be my bank, like JP Morgan, that would front me the money. So you see, it's completely financeable, no money down. I can do it in 30 seconds. And then it flows into my systems, like my accounting system, my compensation system. When Apple stock doubles, the portfolio manager that actually made the buy wants to get paid. So how do I attribute the success of the investment to the person that made the investment when it's changing every minute of the day? How do I pay taxes on it? How do I make sure I don't have a Nick Leeson situation where one portfolio manager makes a $10 billion bet and bankrupts the entire firm, right? So these are all pedestrian problems, but they're solved by that spot ETF plugged into the money manager. That's going to be the number one driver, right? And that's going to dwarf everything else in the near term. The second driver is the FASB fair value accounting. Because if I'm a corporation and I have $1 billion of cash flow this year, I normally would have to either put it into dollars or euros, and I know I'm losing 7% of its value every year in a normal monetary inflation environment, or I'd have to buy sovereign debt like euro bonds or treasury bonds. And then I'm just losing 2, 3, 4% of its value every year. And I can do one of those two things, but I can't invest it in any other property that's going to go up in value. Because like, how do I buy $1 billion building every month? And then if I need to get 500 million back, how do I sell half the building in one day? So property, like real estate, is not liquid. And it's not fungible. So that makes no sense. So then the question is, well, can I just buy $1 billion of Apple stock? No, because it's a security, and it turns out that there are regulatory requirements that say a public company can't have more than 40% of its liquid assets in securities. So when I have 45% of my, if I have $1 billion and I buy 200 million worth of Apple stock and it doubles, I trip that covenant. And then what happens is I'm an SEC 40 company. And what that means is I can't issue debt and I can't issue stock options. And it means the entire company blows up, right? Like the entire operating business blows up, right? And so I don't know how to say this in any way other than everybody gets fired, everything comes to a grinding halt. So the question is, if you're a CFO, you think you're going to risk that? Of course not. The board will fire the CEO, then fire the CFO, then fire itself before it will risk tripping over that compliance covenant. So What does that mean? It means that any major company has to have a treasury which consists of cash and sovereign debt. That's pretty much it. And sovereign debt, although it is a security in one way because there's a counterparty risk, there is a waiver, a carve out by the regulators that allows companies to treat it like it was a commodity or like a currency instead of treating it like a security. So when FASB adopted fair value accounting, they actually put Bitcoin pari passu with treasury bonds. What that means is Bitcoin is the first financial asset that's an asset without an issuer, that's fungible, that's liquid, that could be held on a treasury, comparable to sovereign debt. But the difference is, sovereign debt is going to have a negative real yield of 4% a year. And Bitcoin is going to appreciate, even in the long term, after all this near-term adoption and the bull markets run out. If you roll the clock forward a decade, 2 decades, you can expect that over the long term, over a century, if the S&P index appreciates 7% a year because the money supply is expanding 7% a year, Bitcoin should appreciate 14% a year. So Bitcoin is an appreciating asset on your treasury. Let's just say, I'm being very conservative, 14% a year, whereas you're getting 14% tax deferred, no tax, whereas if you hold the sovereign debt, you might get 5% taxable. So you're getting an after-tax yield of 3% on sovereign debt, and you're getting a tax-deferred yield of 14% on the Bitcoin in the conservative case. And then your alternative is the competitor is owning buildings and land, but as I pointed out, it's not liquid treasury assets. So I think that this FASB decision means that Bitcoin can now be a treasury reserve asset for mega corporations. And that's going to drive and open the door for corporations, instead of investing all of their treasury assets in sovereign debt, they can start to allocate to Bitcoin. But here's a bigger idea. The bigger idea is Apple can't actually keep their cash flow right now. Apple generates hundreds of billions of dollars of cash flow, but they can't keep it because they know that the debt is negative yielding. So what they do is they buy their stock back, or they do acquisitions with it, or they dividend it out. Those are the 3 uses of cash of a public company. You either do an acquisition, you dividend out the cash, or you buy your stock back. And you go to negative working capital. So you borrow money instead of accumulate capital. And if I borrow $100 billion, then this dynamic of negative real yield works the opposite way. Instead of having a negative real yield of 4% on 100 billion, I have the positive yield because I borrowed 100 billion, right? And then I bought my stock with it, which is appreciating at 14%. So the big idea here is you could see a change in the way people view treasury theory, and companies start to keep their cash flows and invest them in Bitcoin because they can, instead of surrendering all their cash flows and running without any capital.